Hey everyone, welcome back to Corporate Decoder, the place where we spill the beans on company secrets. Today we're diving into WAFD INC's latest filing, and let's just say things are getting seasonal, if you catch my drift. So WAFD INC, a notable player in the financial world, just dropped their latest report. This is what's called an 8K filing. Think of it as a special bulletin a company sends out when something important happens that investors need to know about right away. This particular report is from July 17, 2025, and it's all about their earnings for the quarter that ended on June 30th, 2025. Now, before we get into the nitty-gritty of the numbers, let's get a quick look at who WAFD is. They're incorporated in Washington State, and their main office is in Seattle. They're known for their banking services and investments. You might see their stock symbol WAFD on the NASDAQ. They also have these things called depository shares for their preferred stock, which trade under the symbol WAFDP. It sounds complicated, but basically it's just different flavors of their stock that people can invest in. The filing highlights that their common stock is traded on the NASDAQ. This is the regular stock most people think of when they hear about a company's shares. The fact that it's on a major exchange like NASDAQ tells us they meet certain standards for public trading. And then we have their preferred stock. This is a bit like a hybrid between a stock and a bond. It pays a fixed dividend usually before common stockholders get anything. The 4.875% rate is the income you'd expect from this particular type of preferred stock. It's a way for companies to raise money with different terms than regular stock. You'll see this number 0.00009365228 popping up a few times. This is likely their central index key or CIK number. It's a unique identifier the SEC uses to track companies. Think of it as their social security number in the world of financial reporting. There's also a mention of false next to a number. In SEC filings, this often relates to a box that needs to be checked. Here it's probably indicating that they have not elected to use the extended transition period for complying with new or revised financial accounting standards. This means they're keeping up with the latest accounting rules as they come out, not waiting for an extension. The core of this report falls under item 2(2). This item is specifically for reporting earnings and significant financial events. So in plain English, WAFD is telling us how they did financially in the recent quarter. They announced their earnings on July 17th, 2025, and the results are for the quarter ending June 30th. This is where we'll find the juicy financial details. They've attached a press release as Exhibit 99.1 and something called a fact sheet as Exhibit 99.1 and something called a fact sheet as Exhibit 99.1 and something called a fact sheet as Exhibit 99.1 and something called a fact sheet as Exhibit 99.1 and something called a fact sheet as Exhibit 99.1 and something called the numbers for us. The press release is essentially their official announcement to the world about their performance. It's usually more polished and highlights the good news. The fact sheet usually digs a little deeper, providing more detailed financial data than what's in the press release. This is where we can really start to see the underlying performance. Now, this is a standard disclaimer. They're telling us that this report should be seen as part of a bigger picture. You typically want to look at their full annual report and other quarterly reports to get the complete story. This is a really important part of any corporate filing. They're talking about forward-looking statements. These are essentially educated guesses or projections about what might happen in the future. They use words like X years anticipates or may to signal these. It's crucial to remember these are not guarantees. The company is covering themselves legally by saying these are based on current beliefs, but things can always change. This again reinforces that you shouldn't bet your house on these future predictions. They are based on assumptions and the real world can be quite different. And this is where it gets really interesting. They're about to list all the things that could go wrong and mess up those future predictions. Think of this as their what could possibly go wrong list. They mention their September 2024 10K report for even more detail on risks. One of the biggest risks they highlight is interest rate risk. This means how changes in interest rates affect their income and profit margins. When interest rates go up or down, it directly impacts how much money banks make on loans and how much they pay on deposits. They're essentially saying that the overall economy is a huge factor. This includes things like the housing market. If it takes a dive, that's bad for a bank unemployment rates. If people can't pay back loans, inflation, which erodes purchasing power, and the Fed's decisions on interest rates. A potential recession is also on their minds. All these things can make their business much harder. Higher interest rates mean people and businesses have to pay more on their debts, which can put them under serious financial strain. If too many borrowers are struggling, that's a big problem for the bank. This refers to how much money people are putting into the bank. versus how much they're taking out. It also includes how many people or businesses want to borrow money. If people pull their money out or stop taking out loans, it impacts the bank's business. Like all modern companies, they're very concerned about cybersecurity. Hacking, security breaches, and identity theft are major threats that could cost them a lot of money and damage their reputation. This is a significant strategic move. They're getting out of the mortgage lending business. This means they're changing their core operations and focusing on other areas. It's a big shift that investors will be watching closely. They're also acknowledging risks from unpredictable events like natural disasters, conflicts, or pandemics. The COVID-19 pandemic is specifically mentioned as an example of how these events can disrupt everything from government responses to how society functions. This is about keeping regulators happy. If a bank gets a bad rating like a needs to improve on something like the Community Reinvestment Act, which is about serving the community, they can face penalties or be restricted from doing certain things. They're also listing their own internal goals and strategies as potential risks if they don't execute them properly. This shows that even their own plans carry uncertainty. Geopolitical events are also on their radar. Conflicts in places like Ukraine, Russia, and the Middle East can have ripple effects on the global economy, which in turn can hurt their borrowers and their business. Lawsuits are another concern. Legal battles can be incredibly expensive and can also severely damage a company's image. Recent events in the banking sector, where some banks have failed or faced problems, have created a cloud of fear. Negative news about other banks can make customers nervous about their own money, even if their bank is perfectly fine. This is sometimes called contagion. And finally, a catch-all for everything else. Basically, any factor out there that could impact how they do business, make money, or what they offer to customers. Now for the signatures. This tells us who is officially signing off on this report. Here we see the signature of Kelly J. Holtz. She's listed as the Executive Vice President and Chief Financial Officer. This confirms that the company's top financial executive has reviewed and approved the information presented in this filing. It's a sign of official acknowledgement from the company's leadership. Now, looking at this filing from a broader perspective, WAFD Inc. is navigating a complex financial landscape. They're clearly focused on managing risks and adapting to changing economic conditions, including their strategic decision to exit the mortgage lending business. While the report details many potential headwinds like interest rate sensitivity and economic downturns, it also shows they are aware of these challenges and are laying out their concerns transparently. Their stock on the Nasdaq suggests they are a publicly traded entity with reporting obligations that help investors track their performance and risks. The inclusion of preferred stock offers another avenue for investors seeking different return profiles. Overall, WAFD appears to be taking a cautious approach, acknowledging the volatility in the financial sector and the broader economy. Their commitment to publicly disclosing these risks is a positive sign for transparency, even if the sheer volume of potential issues can seem daunting. It's essential for investors to look beyond the press release and dig into the fact sheets and reference reports to truly understand the company's financial health and future prospects. Alright, that's our breakdown of WAFD's latest filing. What do you think of their strategy, especially their exit from mortgage lending? Let us know your thoughts in the comments below. If you found this analysis helpful, please give this video a thumbs up and subscribe for more deep dives into corporate filings. And don't forget to join our Discord community for more discussions. We'll see you in the next one.